The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour here with Darrell Martin. And I was going to go ahead and just check out the market, give you a quick market wrap for the day, just let you know where everything is sitting at. Right now we had the S&P is down 6.75 points. We got the Russell down just 0.4. We got the Dow down 82. And it looks like we got natural gas is up a bit. Along with, we got oil is down $1 on the day, so oil is definitely moving on down. We got silver up, looks like about 90 cents on the day. Gold up $8 on the day, and copper up 0.0125. Looking over at the currencies, we got the pound dollar down 9 pips, the euro dollar down 33 pips, and the Aussie dollar down 21 pips. And on corn, it looks like we had that up about $3 on the day, and soybeans up $6 on the day. So just giving you the current quotes and the market movement right there. Next thing to look over at, we like to check out, of course, that's just our daily wrap-up on where the market's at the moment. We want to look at the fundamental reports that came out today from the governments. And all sorts of, weird rumors swirling around out there about the EU and Draghi and his ability to, if at all possible, to get everything in check. And as you may or may not have known, he actually basically went ahead and skipped out on the meeting last week at the Jackson Hole Symposium. And he was supposed to give a big conference on Saturday, but he did not even show up. He basically said, I'm not going to come to the conference. And this is the big conference where all of basically the heads of finance, the titans of finance for all the countries around the world, come together and discuss how they're going to set monetary policies and things like that going forward. And he didn't show up to it. And with the EU being obviously the number one, global contagion issue right now, it's amazing that he actually decided to skip out. He said he had things he had to work on at home. So just how bad is it? He can't even show up to probably one of the most important summits of the year to discuss in a closed meeting. It's a great meeting because it's a closed-door meeting to really lay things out on the table and see how he can get things resolved, and he doesn't even show up. And so he wanted to go ahead and delay that a little bit longer as much as he could. And he has it delayed now going into September 6th, and that is going to be a whirlwind of a day. And so we'll catch up here in just a second on the fundamentals of the day and of the week. Right now, it's like we have a question from Derek from Knoxville, Tennessee. Derek, how you doing?
Hey, good. Actually, it's Eric without the D, but that's
Eric,
all right.
Okay, all right, Eric. No problem. How's it going, man?
I appreciate you taking my call. Thank you.
Oh, yeah, definitely. Thanks for calling in.
I loaded up the Nadex, and I'm paper trading. And I'm just trying to wrap my head around it. I'm trying to keep it simple right now. I'm doing a binary S&P 500.
Okay.
So I played around a little bit on Friday, but I got one going here now, and I wondered if you could just kind of give me an idea what's going on. So
okay. Which binary and where did you get in and all that?
I went to the daily, and I took the 415, 1400 even.
All right, let me pull that one up right there. The 1500 even, did you buy, you sell it? What'd you do on that one?
I bought it.
You bought it? Okay. When did you buy it?
Earlier in the day, let's see here. Let me close this out so I can see what I did. At 11:38. So I got it at 35 is the average price it's showing me.
Okay. So you got it at 11:38, and I'm guessing that's Eastern time? Is that right?
It is. Eastern, correct.
Okay. So looking over here in the chart, it may do a bounce back up right now. The market actually went down, and we had a deviation level right at 1394. And so the market went down and hit that deviation level and bounced right off of it.
I was actually trading my money account at that point, so I was taking money, making money off my money account. But I thought I'd just put one on of these so I could just kind of wrap my head around what's going on by having one, up for real. So
okay, yeah.
So here's the question.
Okay, what you got?
All right. So right now it's showing profit loss of $1.50 because I have 3 contracts.
Okay.
Does that make sense?
You put in, well, if you have 3 contracts, you bought them at 35
At
each?
35.
And you bought them, right?
I did.
Okay, so they should be showing a 35 times 3. You should have a max of $105 loss on that trade.
All right. And that already shows up in your balance, right? It takes it off immediately off your balance.
Exactly. It takes off your balance immediately. Now, one of the things you're going to have an issue on is sometimes it'll blank out in the open position tab because you can't actually even sell them right now.
Okay.
Because right now they're so far basically considered out of the money that there's no way that somebody would actually sell because there's no possible reward for them to be able to do so. And so let's see here. So like right now you see how there's a blank right there on the 415s next to the $2.
No, 1,400 even. I have.
Oh, 1,400 even.
1,400 even.
Okay, I'm sorry. I had 1,450. I was like, wow. All right.
I might have said that, so I apologize.
All right, 1,400.
But I did the 4:15 time frame.
Right, exactly.
The 4:15 p.m. time frame.
Okay, 4:15 time frame, 1,400 evens. You bought those at 35.
Yes.
And you bought 3 of them, right?
Right.
Okay, so I'll just go ahead and I'll mimic the trade here in my demo account live on the Tiger station there. So yeah, your max loss can be $105 on the trade. Mm-hmm. And as long as it expires above, not at, but above 1,400, then you'll receive the difference if you held it to expiration. So the difference on that, if I go in, it's sort of one of the nice things if you ever forget, you can do the math or you can just sort of type it in, like reopen the ticket, not submit it, but just reopen it. And it'll show you the profit on that trade. If it expired above 1,400, it would be $195 on that trade.
Okay.
And what that is every binary is worth $100. Okay? So if you went in and it's a $100 binary and you risk $35, then the difference between that is a $65 profit potential per binary.
Okay.
So you can make, $195 on the trade. I usually don't hold them all the way till expiration. So
that was a question I was going to ask as well.
Yeah, so I would be looking at, if it gets up to 1,400 itself, then, you could get out at 50, okay? Because basically when it's right at the money, it'll be right at $50. Like right here, we have it marks at $13.98. There's a $13.97. It's pretty close to 50. If it dropped down to $13.97, that'd be like right at $50. I would probably be looking at to get out the trade on that one. Since we already hit a low deviation level and we're bouncing back up, I'd probably be looking for like about a 50% retracement level on the trade. Or a one standard deviation move on the way back up. So I'd probably be looking to get out at about 70 on the trade, so like double your money. And so what you can actually do on the trade is, let's see here. I didn't even get filled on mine yet. So yeah, move further. But I'll just go ahead and put it in to show you exactly how to do it. All right, so right here you can go in, and if you click on that green arrow on your open position tab, and then you put in a take profit. So what it'll do is what you'll notice is it automatically opens a ticket for you in the opposite direction for the same quantity at the current market price. Okay? So I could go in and set this like into sell out, say at $70. If I bought it at 35, and hit place order. And then what that'll do is it'll actually be working my take profit order for me. So that way it doesn't go up to 1,400 and then let's say like 2 minutes before close it goes down to $13.99 and you lose everything. So you always want to have that take, whether you want it at 70, 80, 90, however high you want it. But you definitely want it, you want to take profit goal. And it's sort of an easy way. Now, this doesn't account for time, but as far as to see how much it would make or lose based on how much the market moved, is you can just go down. So let's say the market moved up 3 points, then, this would be worth $60, okay? If it moves up 6 points, it'll be worth $79. So, and the way I did that was I just looked at the strike we were on, that 1,400 strike.
Okay.
And then I just went down the price ladder. So by going down, I'm basically, it's like putting this one more up, okay? So if I go down on that, I'm like, okay, I bought this for, 35. So if the market, went up 3 more points, I could sell it at 60. And all the strikes are the same distance apart. They're 3 strikes apart, okay? So if it moves up 3 points from where it is, it'll be worth 60. If it moves up 3 more points, it'll be worth 79.50. If it moved up 3 more, it'd be worth 91. So basically, if you got 6 more points, really less than that, probably about 5, 4 to 5 more points, you'd be able to sell out at $75 which would require a move up to about 1402, 1403.
Okay. Now, and then how do I do the quick math, just so I can wrap my head around this? So, yeah, I could wait to 415 and hope that I get the full pop or whatever, right? But if it hits it during the day, why would I take the chance, right?
Exactly.
So,
now, if it hits it during the day, it's going to be worth $50, okay? So, because the binary is not exactly, but it's similar to a probability, okay?
Okay.
So, if the market's at 1400 and your binary strike is at 1400, then there's a 50-50 probability that the market's going to be there at the end of the day. So that's why it's worth $50. Okay?
All right.
So you know that any binary you get into will be worth $50, once the underlying market's at that price. Now the further it goes above it, so if it goes up, to 1403, then it'll be worth 60. If it goes up by just looking 3 points down, so 1400 to 1403 would be like looking at the 1397, be worth 60. If I go 3 more points, if it went to 1406, then it'd be worth 79.50. And then the easy math really, go ahead.
And so what, like, if I'm looking at this here then, and I'm correlating this to my maximum loss and maximum gain when I first put the trade on, per contract it was like 35 and 70 or something like that, if I remember right, 35.65. Is that right?
Exactly. Yeah, because the sum total will always be $100.
All right, 35.65. So then the maximum I could during the day then for me to clear this thing out, knowing, hey, even if it's at 1425 at 415, I'm still maxed out at a certain price if I allow it to go to 415.
Right. Really, the only
what number am I?
Go ahead.
So what number am I looking at during the day to know that I've gotten the maximum I can get out of that trade?
Okay, so the easiest way to look at that is to look down here. Basically, you're not going to be able to get out for less than $98, okay? Except at expiration, you'll be able to get out for the $100 difference. So what I can see right here is if we go 3, 6, 9, 12, 15. So if we went 15 points up from where we're at right now, it'd be worth $98 live. Okay?
Okay, so it would have to be, you have to really get a move for the live number to max you out for what you're going to get at the trade close at 415 if you were right.
Exactly. Now, if it moves up 3 points from here at expiration, you'd still get the maximum profit. So that's just if you're trying to do it right now. Now, as you get closer and closer to expiration, that number is going to get closer and closer. So because there's less time for it to move, so the less time there is for it to move, it's sort of like on traditional options if you're thinking about gamma.
Yeah,
and how it changes your delta.
That, yeah.
So it's sort of like your gamma is getting bigger and bigger because it's pushing that delta to either a 0 or a 1. So further it moves up, then the faster this number will actually become like 12 points away, then 6 points away, then 3 points away, then of course it'll be right at that level. It'll be worth $100 right at expiration.
All right. Well, I'm going to have to watch this on archive. I'm trying to wrap my head around it. I really appreciate your help.
Oh, no problem. Definitely check out that map feature too, the chart feature. I mean, if you click on the chart, you can see the price movement of the binary. It's pretty helpful.
Okay.
All right. Well, thanks for calling in.
Thank you, Darrell.
Bye.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And I just want to thank Eric for calling in. If you got any questions, feel free to call in at 877-927-6648. Again, that's 877-927-6648. And let's go ahead and wrap up on the fundamental announcements of what's been going on today and what's coming up this week. Of course, last week we had the Labor Day holiday, and Canada also had a bank holiday as well. So, of course, little to no volume movement. The market actually did drop down 10 points before doing a little bit of a rally. Yesterday, from Sunday close over to yesterday's close, I guess you could say. And then today we're down a few points on the day. And then looking over at today, what we have going on is the biggest announcement we had today was the ISM manufacturing. And Australia will have its GDP Q over Q, quarter over quarter, coming out tonight. So if you are an Aussie dollar trader, you could definitely be keeping your eye on that one. And that's 9:30 Central Time, Eastern Time. 9:30 Eastern Time, 8:30 Central Time. Today at 10 o'clock, 9 o'clock Central here, we had the ISM manufacturing PMI. And if you don't know what that is, basically they survey 400 different purchasing managers, and they ask them to rate the relative level of business conditions for employment, production, new orders, price, suppliers, deliveries, and inventories. So basically, how do they feel business conditions are for those things? And like I said, that report came out this morning right around 9 o'clock, and it came in worse than expected. Right as that report later came out, market started dropping, went down ever since, and now it's been doing a little bit of a pullback after it hit the one implied deviation level right there at 1394. And again, basically above 50 is indicated as an expansion, below 50 indicates contraction, and they thought we were going to get 50.3. We actually got 49.8. So basically that's showing a contraction in the market based on the survey of the manufacturers that they did the PMI reading with. I mean the ISM meeting with. And Britain's also going to have its services PMI. It had that this morning. at 10:37, 9:37 our time. That one actually came in a little bit better than expected. And what they do is they go in and they do it's basically just a leading indicator, and it's how markets react to purchasing managers, and sort of a similar type indicator. That came out, and again, that was a little better than expected, and that came in at 9:37. When that came in, the market sort of stopped, had a little bit of a up move, and then its final bottom, and has been moving up ever since. And if we go ahead and we look over to tomorrow on Wednesday's schedule, what we got going on is we're going to have the French going to have their CPI number coming out in the morning at 2:15 Central, 3:15 Eastern. And what that is basically it's the average price of goods and services, basically, what they're costing and everything. So the Consumer Price Index, CPI. And so that'll affect the franc. So if you're looking at, trading the Swissy there, then that would be one of the times that you'd be looking to trade it. And then we're going to have a couple other announcements coming out. We're going to have, let's see here, the pound is going to have its 30-year bond auction overnight, so that could have an impact if that's way off of expectations. I don't see that being too big of a thing. Germany's going to have its 10-year bond auction. That, of course, will be looked at very closely. Moody's put the whole EU on a negative downgrade watch after they've already downgraded a lot of the others, and they're looking at putting them from a AAA to a negative rating. And when they move them into that, it's not going to be good for them, and so they're looking at doing that because all the major countries right now are on that same list, and so there's no reason not to have the EU on it. And so that news came out this weekend. And then we're going to have our revised non-farm productivity report is going to come out at 8:30. Not the strongest, indicator we're looking at, but basically it's how productive are the labor markets. It's very related to inflation. And basically a drop in worker productivity is equivalent to a rise in their wage. So when businesses pay more for labor, the higher costs are usually passed on to the consumer. Many things will get more expensive if that number is dropping. So they're expecting 1.8%, which would actually be a pretty high number, one of the higher numbers of this year. And so we'll see what comes out on that. Again, that won't have a huge impact, but that's 8:30 Eastern and then 7:30 Central Time for you tomorrow. Tomorrow night, the Aussie's going to have their employment change report, and their unemployment rate is going to be coming out. So that'll affect the Aussie dollar tomorrow. And then the big day is going to be on the 6th. That's going to be this coming Thursday. And it is a day full of news. And it's the kind of day that you better be trading some way that you consider somewhat safe. You want to maximize your leverage. You want to minimize your risk. And, if you want to do that, definitely hop over and check out Nadex. This is a great time to check it out. Hop over to TFNN.com. Over here on the right side, click on Nadex. And when you click on that, then you'll see the Nadex information right here. Go ahead and click Create an Account. And then you'll be able to sign up for a live or a demo account. For a live account, there's only a $100 funding requirement. You can actually place trades with $100 or less. As you saw, one of the traders was talking about placing a trade, $35 per binary. You can even place it for less money. And then for the demo account, click on Open a Demo Account. Put in your username, your first name, last name, phone number, and email address, and apply for demo. They'll send you an email address. You'll have access in 15 seconds. Go ahead and check that out. When we get right back, we'll talk about what is coming up this Thursday.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And the last thing we were looking at is we were checking out the fundamental reports, and we were talking about how there's a lot coming up this coming Thursday. And Thursday is definitely going to be the market mover day overnight and during the day. And you can place trades on Nadex starting as early as 6 o'clock. And you can trade them all the way through the next day at the end of the business day there. So if you want to play some of that overnight movement but have limited risk, go ahead and you can put trades in. You can put take profit orders in. Great time to demo trade it and check it out. So right now, looking at the Thursday, September 6th reports, what all is coming out? Well, we have the French 10-year bond auction. We have the German factory orders. We have the revised GDP for the euro. We have the asset purchase facility report coming out of the pound. That's a big number. We have the official bank rate coming out, basically the interest rate coming out of Britain. So that's obviously huge. You've got two big countries releasing their bank rates. So with their rate statement coming out there from Britain. And then we're going to have our challenger job cuts, not as big of a number that people are usually looking at. And then we're going to have the minimum bid rate coming out of Europe. So you already got Germany, okay, having some big reports coming out. You got France and Britain and the euro all coming out with their interest rates on the same day. We're also going to be having the ADP non-farm employment change report. That is a huge number, okay? And then we're going to have the ECB press conference 15 minutes after that. At the same time, we're going to have the unemployment claims report come out of the U.S., And an hour and a half later, we're going to have the ISM non-manufacturing PMI, which is a big number coming out as well. So literally all this is coming out on the exact same day. There's so many reports coming out with Britain's rate, Europe's rate, the French auctions, and Germany's factory orders. All these things happen back to back to back to back to back. That you definitely just better be ready. Better be definitely having some nice tight stops in there. If you're trading stocks, be careful because there could be just a major gap overnight on the entire market as a whole. But there's going to be a lot of movement no matter what. And it's all going to culminate on the ECB press conference. That's going to be the biggest thing next to the ADP non-farm payroll. The reason the ADP non-farm employment change is going to be big because they're looking at that and, of course, the report that's going to come out on Friday as to what that's going to do to affect the market, the non-farm employment change number that's going to come out Friday. Those two numbers, I think, will have a huge impact on any kind of QE announcements and what Bernanke will say the following week. And that following week, we've been talking about this for weeks. Be ready for it. Because when it comes, it's going to come fast and hard. And that following week is massive because we have one major thing coming out. And that we have two major things coming out. The first major thing we have coming out is the German Constitutional Court ruling. And, that's just going to be, that's like a big Judgment Day, massive thing that's going to impact everything. And so, again, that is coming out on September 12th, and that's the German Constitutional Court saying, is it constitutional for the European Stability Mechanism to be put into place? Should they be taking on all of these debts of all of these other countries? Because that wasn't part of the original treaty. If it is constitutional, then they're going to have to actually modify their constitution to allow this to happen. Or they're going to have to rewrite the entire ESM to try to figure out how to make it work. And, of course, coming out this Thursday, you're going to have the report saying how he plans on, Draghi plans on doing all these different things to make the market work, and what all his plans are on buying bonds back. Of course, countries are going to have to come back to them and say, we want you to buy them, and then they're going to have to agree to certain requirements to get them bought. And are they going to be willing to agree to those requirements? So far, they basically said no. So Spain has said no, and Italy has been like, we're sort of sick of you. So basically, people aren't really coming together on all this. They're like, we'll take your money, but we don't want to take any of your requirements with it. And so that's really what's heading our way. And this Constitutional Court ruling was so big, okay, that the Fed actually moved the day that it usually announces its Fed funds rate announcement. The announcement usually comes out on a Tuesday or Wednesday. And, go back and check the records for the last several years. You'll see that that's accurate. It's Tuesday or Wednesday all the time. But this time it's not. This time it's on a Thursday. And basically the Bernanke and the guys are like, we need to wait and see what happens from this Constitutional Court ruling before we make our announcement so we can know, how we need to hedge our bets, what we need to say. And so that statement actually is not going to come out until Thursday, 12:30 Eastern, 11:30 Central Time. And we'll be right here with you as it gets announced. And we'll be talking about it and seeing what's going on. But going to be a huge impact over the next 2 weeks. And these next 2 weeks are really going to be defining for the year. Shortly after that, within a couple of weeks, we're going to have the German Troika, or the Troika meeting on Greece, not German, but the Troika meeting on Greece, and whether or not they think they should get any more money or get kicked out, basically. I think they're going to be kicked out. I think within either fall or early spring of next year, Greece will be gone. I think Finland has had enough. I think they're going to be checking out. And then at that point, it's how stable can they make it for the rest of the countries to see, just what the viability of the EU is going forward, what the viability of the euro is going forward. So it really is going to be interesting to see how all that unfolds. Once that unfolds, unless there's other new news coming out, because they just keep trying to buy time. I don't know how much more time they're going to be able to buy, because their whole plan was to have the ESM up and running by January 1st of 2013. Then, of course, the big news, all eyes are going to be focused 100% on the election. And will Romney and Paul win, or will Obama-Biden win? Will quantitative easing win, or will, cutting all of the spending win? Really, what's going to happen? And there's good and bads on both sides. So I definitely am more for the lower taxes and tighter spending of the government. But, whatever your choice is, either way, just trade with protection, okay? Trade with Nadex. And there's too many things out there that are dangerous for you, and you just don't want to be caught in the middle of some massive spike happening out of nowhere, literally in minutes. Sometimes in seconds you can see a 5, 10, 20-point move depending upon what announcement comes out and when. And so there's some definite ways to play these. You can go in, you can use the binaries, you can use the spreads. Both have limited risk, and both allow you to trade in a completely protected environment, meaning you know how much you're going to risk no matter what, and you won't get stopped out no matter how much the market moves against you. And, the trades offer a great risk-reward ratio. I mean, 1-to-1 really is a bad trade almost on Nadex. You can find ones that are 2-to-1, 3-to-1, 5-to-1, 20-to-1 on Nadex. So, meaning, for every $5, you can make 20 times that amount, just depending upon what trade you choose. And the time to do a lot of these trades, these, higher return trades, is coming up, because when we have these big announcements like what's happening on Thursday, and we have the big announcements happening next Wednesday and next Thursday, that's when you're going to go in and you're going to look at things like straddles on the market and see how you can play some good, look at the implied deviation levels and pick your strikes based on where you believe the market will move to, either up or down or both, by straddling them. That's really my favorite strategy when you have so many unknown factors, is straddles on the market. And even be looking at possibly playing some reversals and everything else in the midst of all this hectic chaos that'll be going on. And looking at the deviation levels, let's go ahead and check that out for the day on the market. And right here we had the market move down. Actually, had a standard deviation, a full move would have been down to 1389 or 1390, and one deviation move was down to 1394.50. So if we round that off on how the S&P 500 ticks, 1394.50 is a 0.7 deviation level. That's actually where we look at usually tightening our stops, taking our profits. So we would have been tightening stops at this point, and definitely, called it, basically to the penny right there. And then, looking over, we'll go ahead and check out some of the other major markets. And looking over here at the Russell moved down to 805. And so that would have given us, really, on the close on that, with yesterday's close, we have to go all the way back, but there's almost no movement at this point. It really did its big move, I guess you could say, overnight when it moved up to the high side of 816, and that would have been, this is a 1 standard deviation level move during really the non-trading hours here going on overnight, and it went up right to 815.60 would have been a 1 standard deviation move. So it basically moved that 1 standard deviation. It pulled back an entire deviation level right there. And now it's moving on back up to 812. 812.65 is the 0.7. So it looks like it's about at its stalling point. You can see even this morning, before the market opened, and even a little after it did open, that was really like a major resistance level for the Russell 2000 right there, where it held strong. Now, seasonally, usually the market is rallying up this time of year, right at the beginning of the month, especially the day after Labor Day. Seasonally is usually a positive day. So I would not be surprised for us to see it, most of the indexes actually pull it through and actually post a gain, though I doubt it will be a big gain, at least a small gain, before the day is over. Now, looking on over at the NASDAQ, checking that out, and where it's sitting right now. And it pulled down to 27.42, and that would have been just below a 1 standard deviation level at 27.46, so just a couple points below that. So right here. And then it moved right off that again. Those implied deviation levels really, really do help call where you want to be taking your profits. Checking out the Dow and where it stands right now. Let's see, it moved on down to 12,965. And we had to move down to about 12,961. It would have been a full deviation move down. It didn't quite pull that all the way down. And then it had to move up to about 13,125. And that wasn't even quite half a standard deviation. So it didn't even hit a half, and then it turned over. So when it didn't hit a half and turned over, I'd be definitely going to the short side. And if you do put the two together, you definitely do get a full standard deviation from high to low. Now, if we go in and we check out our, copper. Copper is, all these are markets that, of course, you can trade over on Nadex. And that right there had a move down to about 3.46. And, that really it basically had a big move up overnight to 3.5. Which was 3.51 would have been an exact standard deviation move, and then it pulled on back down to almost full standard deviation retracement from the Monday high. Again, not a very liquid market right there, but the Monday high moving on down. And hopping over and looking at some of the favorites there, we got gold going on. And so what does gold look like? Gold has not done a whole lot. It has definitely moved up some today. But if we look at gold and the expected move on the upside, we're looking at a move much, much higher than where we hit now. We only moved up to 1701, and our low really on the day is 1690. looks like gold right now is just sitting and waiting to see what's going to happen on Thursday. So I think we're going to see a lot of movement come Thursday on gold. And then looking over at silver, silver actually has had a little bit of a bump up right there. And silver on the up move there has moved up to, what, 32.43, and it looks like it's going to have the same thing going on. It is waiting to see just, what's going to come out from, the latest report. But, so far, not a whole lot going on silver. And then if we go in and we check out natural gas, on natural gas, I'm having some big moves going on. You can just see just the spike that happened early this morning. And natural gas had a standard deviation level going up to, it's like 28.43. And it looks like we got a 28.88. And let's see, 28.43 is about right here, right where you would have definitely been tightening your stop levels up. And basically it's been bouncing right in this area right here. So we've probably seen the run that we're going to see on natural gas today. If anything, we got to see a retracement at most on natural gas. And what about oil? So we know oil definitely has been moving quite a bit and dropping today from the close of yesterday, and even from the close of the previous day there. So looking over at oil, we are looking for a move really down to about 95.49. We got that move down. That's right around where it stopped, within about 30-40 cents, just moving up and down off of that level. If it does decide to move further than 95.49, then we'd expect to move down to 95.07. And 95.07 really is the low of the deviation level. And that's one deviation level down on implied, not standard, implied deviation level. Down to 95.07, we got down to 95.02. So literally just within 5 cents of that, and that's where oil really stopped. And has just been, jumping up and down. So it's probably down with its big move on the downside for the day without any further, news to drive it further. We can check out corn. Looking at corn now, I'm always looking at the Nadex contract right now. Nadex is fall in September at the moment, but I think it's actually going to be switching over. It may have switched over already. And so the way that we check that, the way that we know, is we go in and we go to commodities, and we'll click on corn, and just click on it, and it'll actually tell you, oh, corn's now on December. So as of Monday, it looks like they went ahead and rolled corn on over. So now we can check corn and go ahead and look at what the levels would be like for corn on a move all the way over. And on corn, looks like we would have had a move of one deviation level on corn was $6. Actually, it was $13. And $13 on corn. So if we were looking at the close of Friday on that, not really counting yesterday, looking at close, we've been down to $17.99 on the low side. Looks like we got $17.98.85. So right there, we were right at the $17.99 level. So corn has probably also made its move for the day. And it looks like soybeans has the same thing going on. Nadex has just rolled over on soybeans as well. And so, which is nice. I like it whenever they're following that active month contract anyway. It makes life a lot easier. And if I can type right here, we'll pull it up and check it out as well. So we got /ZS. I think if I just do that, it'll pull it up for me. Yeah, it's actually got it on November. So if we want to check out and see what contract is Nadex following on soybeans, let's check it out. Click on it right there. It'll tell us it's looking at the November contract. So now that we know we have the November contract on the soybeans and looking at a one standard deviation move down from there, looks like we are pretty much right on the money with it as well. We'd be looking for a 12-point move down from the close. And actually, it had a one standard deviation move up and then retraced right off of it. So we'll go ahead and wrap up with the currencies right when we get back. Stay right there, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, here we are. Welcome back here to the Diagnostic Trading Hour. What we're doing is doing a wrap-up, looking at the implied deviation levels for the day, and we want to wrap up looking at the Forex deviation levels here. So checking out what we got going on is we got we'll start off with the Aussie dollar here. And on Aussie dollar, it looks like we were looking for a move either up or down. On the up or down move, looks like it could have moved down to that. We really didn't get that move down. So not really the move we were looking for on the Aussie dollar. Down about 24 pips from yesterday. Down quite a bit from Friday, though. So definitely some moves going on over there. And looking at euro dollar, I mean, it's been sort of flat really since Friday. So it did have definitely a run up on the euro dollar. Moved all the way up to, let's see here, what do we got? 26.26. So that's a pretty big move. And so on the euro dollar there, that would have been moved. 26.43 would have been a full standard deviation. So we were only maybe like 10, 15 ticks away, 15 pips away from that move on the euro dollar. Looking over at the pound dollar, check that out and see what move we'll be looking at on that side. And over on the pound dollar for the day, let's see, we're at 1.5872, so basically flat from Friday. And on the high side and the low side, we're looking at a move up to as high as 59.47. Definitely did not get that. We got 59.08, which would have been basically a half a deviation move up, 59.08. So 59.07 was actually a half deviation move up to the upside. Turned around, came back down. Looks like a lot of the currency is just sitting and waiting to see what is going to come out, what's going to be next. And then checking out the U.S. franc and where it's sitting at right now, it's over there at 95.60, and really not too much of a change from previous. But we did have a move down earlier in the day to 95.07. That would have brought us on down to 94.97. So literally within just, 5-10 ticks of 0.7 deviation level. So, again, a lot of these currencies just really waiting to see what's going to happen. And the big day is going to be Thursday. Then things can start moving again. So I cannot wait for Thursday. We're going to have a lot of plays, a lot of things coming up that we can take advantage of. And then looking over at the U.S. yen right now, sitting over at 78.42, basically where it closed out on Friday, 78.40. And we did see a little bit of a move down to 78.27, and it actually got a little bit lower if you want to look at the Sunday lows there at 76.18. But even with those, 78.18. So, but even with those lows, still not quite pushing, anything more than a half standard deviation level on any of the currencies. So all the currencies are just waiting to see what comes out of the U.S., what comes out of Europe on Thursday and on Friday morning. And so with all that, just make sure to keep everything in check, keep watching it. And let's go ahead and do our market wrap to wrap up the show. We wrapped up the fundamentals. We talked about the statistics. We looked at how markets are moving. We talked about what's coming up this week that you need to be concerned about and you need to have on your radar for potential trade entries. So for a market wrap, we got the S&P up 6.5. We got the Russell up 1.5. We got the Dow down 80, and we got the NASDAQ basically pretty much flat on the day. We got natural gas up 0.07. We got let's see here. We got oil up down $1.30. Silver up 89 cents. Gold up $9. Copper up 0.013. And looking over at the currencies, we got the pound dollar down 18 pips, the euro dollar down 34, and the Aussie dollar down 23 pips. And looking at that, let's see what corn. We got corn down $1, not really even moving much. And then we got soybeans down 0.08, basically barely even moving also. That is our market wrap for the week. Looking at the diagnostic setups, and definitely stay tuned tomorrow so we can talk about some plays for Thursday, how you can take advantage of these announcements. Have a great day, and I will see you tomorrow at 1 o'clock Eastern Time.